India's retail inflation continues to ease, hitting a 12-month low of 4.75% in May, down from 4.83% in April. Now, this drop is even better than analyst expectations, who had predicted, in fact, a rise to 4.85%. Notably, core inflation, which excludes the more volatile food and energy prices, came in at 3.1% for May, down from 3.2% over the previous 2 months. This means inflation has stayed within the RBI's target range of 4% plus minus 2% since September last year. Food inflation, which has been a sticky issue, also moderated to 8.62% from 8.75% in April. However, it's still higher than the 3.3% registered in May 2023. In rural areas, inflation dipped to 5.28% from 5.4%, while urban inflation stood at 4.15%. And there's good news, more good news in fact. Earlier this week, the World Bank revised India's FY25 growth forecast upward to 6.6% from 6.4% projected in the month of January. This is thanks to strong public investment, private capex, and a rise in private consumption too. Now, these estimates reinforce India's position as the fastest growing major economy in the world. Looking ahead, the World Bank also raised the FY26 forecast by 20 basis points to 6.7%, noting that private consumption will benefit from a recovery in agricultural production and declining inflation. The next year, FY27 growth is projected at 6.8%. Now, last year in FY24, the Indian economy grew at an impressive 8.2%, up from the 7% mark in the previous financial year and significantly higher than the 7.7% growth projected by the National Statistical Office. So, what does all of this really mean? Robust economic growth coupled with cooling inflation? Some might say this points to a potential rate cut, right? Well, despite the favorable macroeconomic situation, it appears that the RBI is waiting for cues from the US Federal Reserve before making any moves on monetary easing. Now, the good news is that we won't have to wait too long, as the Fed's policy decision is expected later tonight. However, it looks like the Fed will keep rates steady due to stubbornly high inflation in the US, which remains more than a percentage point above the US annual target of about 2%. But don't lose hope, a rate cut is still on the horizon, as other countries besides the US have already started cutting rates. Take the European Central Bank for instance. Recently, it confirmed a reduction in interest rates despite ongoing inflationary pressures in the 20-nation Eurozone. Now, earlier this month, Canada became the first G7 nation to cut interest rates in the current cycle, while Sweden and Switzerland's central banks have also announced their own rate reductions this year.